Three stocks I'm buying November 2020 edition. Welcome in, guys, to my favorite series I do on this channel each and every month. Some call it three stocks to buy, some call it three stocks to watch. I call it three stocks I'm personally buying. And it's not just about me sharing what three stocks these are that I'm buying. It's all about me giving my bull thesis on these three stocks, why I'm bullish on them, and kind of explaining that. And I think there's a little bit to be learned out there around how I make a bullish thesis around a stock. I think that's actually much more important in these videos than just these pure three stocks. So anyways, guys, that's pretty much the whole intro. I hope you guys enjoyed today's video as always. If you haven't had a chance to get in the hub yet, go ahead and do it. It is our completely free Discord chat where you can chat about stocks with a ton of other investors out there, including the stocks we're going to talk about here today. If you want to join in there, like I said, it's completely free. It's second link in the description down there. And other than that, if you guys don't mind, just smash that thumbs up like as hard as you possibly can, because it helps the YouTube channel out massively in the algorithm. I appreciate each and every one of you guys as part of the thumbs up squad. It makes this job pretty awesome. All right, guys, let's start getting in this. First stock up of these three is Callaway Golf Company, ticker symbol Eli. This is what I call one of my exes, okay? We haven't been together in quite a while, but Callaway and I, we're hooking up again, okay? And Callaway's had some big news recently, okay? Callaway, if you don't know, it's a golf equipment maker, the biggest in the world, the baddest in the world, and $1.4 billion market cap as of today for this company. But the reason I'm getting back in the stock is this company had earth-shaking news recently, okay? Look at this. This just came out this past week. Golf giant Callaway acquires Topgolf in $2 billion deal. When I saw that, I was absolutely in shock. I was like, did I just read that right? I was like scrolling on the bottom bar of the TV, and I'm like, did I just see that right? And immediately I went on my iPad and started looking this up. I'm like, yeah, this is legit. I can't even believe this, because this was a deal that, you know, just came out of nowhere, basically, in terms of like Callaway actually buying the whole company. They were already an investor in the company, but buy the whole company. And also there was talk about this was going to be a $4 billion deal in the past. Like Topgolf was going to be basically go IPO for like $4 billion or something like that. This was crazy. Golf giant Callaway acquired the rest of sports entertainment company Topgolf in an all-stock deal Tuesday, with the latter valued at $2 billion. Now keep in mind, the deal still has to close. It should close in early 2021, okay? It's looking pretty good though, okay? Topgolf was founded in 2000, and just 6 years later, Callaway made its first investment in the company, which included an exclusivity deal across all locations. In 2018, Callaway increased its stake to 14%, and now it owns the entire company as long as this all goes through in the paperwork and all those sorts of things. Revenue of $1.1 billion in 2019 for Topgolf. Customer demo, look at this. Over 50% of Topgolf's 23 million guests last year identified as non-golfers. That would be me too. I would identify as a non-golfer. You know what I mean? Just like I go to Topgolf many times per year. I would say probably 5 to 10 times per year. I'll go to different Topgolf locations, and I don't identify myself as a golfer, but man, it might get me closer and closer to becoming a golfer, and that would obviously be a very good thing for Callaway, because it's a good probability Callaway might sell me some clubs or different equipment that Callaway sells, right? Okay, scale, 71 locations across 5 countries, 30 states, and Washington, D.C. are either opening or coming soon. This deal will help Topgolf scale its operation and give Callaway access to millions of prospective golfers, all while providing a case study for the industry as it finds its new ways to appeal to younger and more casual players, which is super important for the game of golf and super important for Callaway, okay? Look at this here. This comes out of CEO Chip Brewer. Got a lot of respect for this gentleman. Look at what he says here, okay? Topgolf is the single best thing that happened to golf since Tiger Woods. It's going to be the largest source of new golfers for our industry. That's a big statement, man. We're talking about Tiger here, okay? This is the biggest thing since him. I gotta say, I probably agree. I mean, I can't think of anything bigger that's happened since, you know, Tiger Woods obviously became a huge name in the 90s and inspired tons of people to, you know, take up the game of golf. I can't think of anything bigger than Topgolf, actually. I mean, this is a place that attracts millions and millions and millions and millions of people all over the world to come basically play a sport that they would never, ever even think about playing. But man, it's a fun place. It's a fun place to go. It's a good time. Here's some pictures of our Las Vegas location. Oh man, this location's epic. This has got to be the coolest Topgolf of them all. It's right off the strip. The views are absolutely beautiful from this location. It has multiple pools. It has a VIP area. Like, it's just epic, man. It's a great place not just to go golf, but to hang out, have some drinks, watch, games, things like that. It's absolutely amazing, okay? Topgolf IPO could value company at $4 billion. This came out before Rona took off, okay? This came out back in January of 2020 out of Bloomberg. And this is what's really interesting about this deal. Well, I mean, there's a lot of things that are really interesting, but the valuation, because it was literally talk that this company was going to IPO this year, and it might have, if it wasn't for Rona, for $4 billion. That's a big valuation. And look at this, even as recently as July, Topgolf said in talks to go public via Churchill Capital. Driving range company earlier eyed $4 billion IPO. Topgolf says it remains focused on growth and reopening safely, and that was just this past summer, okay? So there was a lot of talk that this might have been a SPAC deal potentially coming, or a full-blown IPO, or one of those blank check type situations that we've seen some companies do out there. And I mean, holy smokes, guys, $4 billion was really interesting. I thought $4 billion, when I heard that, was pretty interesting for Topgolf if they were going to IPO. $2 billion? Yeah, okay, I like that a lot, all right? I really do. $2.5 billion is a real number in my opinion, because you got to include the debt. Company, I'm sure, has some cash on the balance sheet, but they also have over $500 million in debt on the balance sheet. So really what Callaway's paying for this company is $2.5 billion, okay? Then in my terms, if you actually run the numbers and things like that, if you include the debt, okay? But still, $2.5 billion, that's a $1.5 billion less than what we were talking about literally just before the Rona happened, okay? Callaway had about $165 million, somewhere around there roughly, in cash as of its latest quarter. It had debt of $628 million. This is long-term debt as well, okay? So if you put the debt load from Topgolf in the debt load of Callaway together, it should be somewhere around $1.1 to $1.2 billion in long-term debt when these companies are combined, which is definitely a good amount, okay? There's no doubt about this. However, keep this in mind. 2022, when hopefully everything's back to normal, okay, the company should be able to put up, Topgolf and Callaway together, should be able to put up $3 billion plus in revenues, in my opinion, pretty easily, okay? Now, as far as net income goes, that remains to be seen, because remember, Topgolf is all in growth mode. Topgolf is not about profitability right now, or the bottom line. It's all about growing more locations, growing their massive TAM, which at the end of the day, this is a company that can just fit a lot more Topgolfs. I mean, heck, in my city alone, I think there could be 2 more Topgolfs. I think there could be one in Henderson. I think there could be one in Summerlin as well, okay? So, I think this is a company that just has unlimited growth in front of it over the next decade, and it's going to be, huge revenue numbers in the future. Now, Callaway is a very profitable business model by itself, very profitable, okay? And Topgolf locations by themselves are very profitable, okay? It doesn't mean Topgolf as a company is profitable, because they're expanding so many locations, hiring a ton of employees, expanding the business bigger and bigger to go after this massive opportunity. But the fact is, it doesn't take a rocket scientist to go to a Topgolf on a Friday night and walk around and realize, oh my gosh, this company's a gold mine, okay? It doesn't take a rocket scientist to figure that out. Even in this Rona time, I can tell you their locations are more than likely still an absolute gold mine. And I've been to several since Topgolf reopened, and I'm telling you, these locations are packed and they are doing business, man. I mean, there's a lot of times you can't even get into the locations on some nights, okay? I mean, it's just, it does, like I said, it doesn't take a business genius to walk around one of those and realize, oh man, they're making a few dollars in here tonight, okay? Now, so the company right now has a $1.45 billion market cap on it. Now, once they issue those shares, there's another $2 billion out there. The real market cap I'm paying if I'm buying the stock here today is about $3.5 billion, somewhere around there roughly, okay? Around $3.5 billion. But I'm getting a company that is a revenue growth beast that has 2 iconic brands in the golf game, Topgolf, right, and Callaway. Massive. Never mind, we're not even talking about the top tracer technology or any of that proprietary information technology that this company has, okay? We're just talking about it from the Topgolf location perspective in Callaway, the company. So I'm getting a revenue growth beast. I'm getting a company that should grow revenues top line 10% plus per year for the next 10 years. Like for this whole decade, 2020 through 2030, this is totally a company I can definitely see growing revenues 10% per year pretty much every year. And that's incredible. There aren't that many companies that you can look out to over the next decade and say that company's going to grow double digits probably every single year for the next 10 years. And I think this company absolutely can as a combined company, okay? Which Callaway alone would not have been able to do that, in my opinion, at all. Now, the risk. I know a lot of folks love for me to speak about the risk in regards to any stock out there, especially one that I'm really excited about. So Eli, the risk is they could mismanage Topgolf. So essentially the head of Topgolf, he's going to step down from the company and pursue other opportunities once this deal is closed. However, the rest of the Topgolf team should remain intact, but there's always possibility that maybe Callaway just wants to dismantle the Topgolf team and change their culture there. I don't think that's going to happen. I don't think Chip Brewer wants to cause any drama there or make any missteps there. So I don't see that happening. However, it is a risk, and you got to think about these things. What happens if Callaway completely mismanaged the company and got rid of all the good employees that are at Topgolf that are helping the company expand massively? Also, the other risk is debt interest. So we talked about this, $1.1 to $1.2 billion of debt on the balance sheet. Obviously, you got to pay interest on that. That's a possibility that eats into the cash flow, right? As they continue to pay down that debt over, let's say, the next 5-10 years, it eats into cash flow. So rather than paying out dividends, maybe doing share buybacks, things like that, they have to worry about paying down that debt. So that's absolutely a risk as well. And then the last risk is competition eats Topgolf, and there's just too much competition in the space, and everybody wants to build these epic Topgolf locations just under different names, essentially. I think that's going to be tough. The reason being is essentially a Topgolf location costs $20 to $50 million to build, okay? Never mind the team you got to put in place to get one of these projects built, opened, and open well, right? 20 to 50 million? I mean, you better be well capitalized for this. It's not like just anybody can just, come up and be like, I'm going to build one of those locations. It doesn't really work like that. You need the land, and the land in premier locations like Topgolf wants, generally a little expensive, okay? So 20 to 50 million is what you're looking at for a build out, and I think that's gonna keep a lot of competition away, okay? So Eli is very interesting in my opinion for a long-term investor like myself that is looking out from a perspective of what this company will do in the future years and not just the future months. If you're looking at Eli for the future, 6 to 12 months, I don't think it's the right way of looking at this stock, but if you're looking at it from the long-term opportunity of Topgolf's expansion around the United States and around the world over the next 10 years, I think it's really darn intriguing, okay? That's why it's the first stock up here of these three. Second stock up here of these three stocks is Dropbox, ticker symbol DBX. This is a stock that's right under $18 right now, and this is one we're gonna have to battle with, okay? And when I say battle, I'm talking about battle with the short sellers. We'll get into that in just a moment, but Dropbox is a cloud company valued today at $7.4 billion. And guess what? This company's reporting earnings this week. Literally just a few days from now, Dropbox will be reporting their Q3 earnings. This is going to be massive. It's probably going to move the stock price big. I don't, who knows if it goes up a bunch, down a bunch. We will see. I can tell you if it goes down a bunch, I will gladly be picking up more shares for obviously much cheaper price, okay? The company said it expects revenues between $481 million and $484 million for this quarter. We'll see where that comes in at. Analysts are expecting about 482, so right in line there. Folks expect the company to have about 19 cents per share of earnings, and that suggests an improvement of 46.2% from the prior year quarter. Massive improvement there. And notably, the company beats estimates in each of its trailing 4 quarters. I love a company that just continually beats numbers, and Dropbox, don't be surprised if they beat these numbers as well. The average surprise being 20.83% for Dropbox, okay? It's a company that's expected to grow 10.9% revenues next year. I think they're going to grow more than that. I think more to probably 12 to 14%. That's kind of what I expect next year for this company. Maybe even better than that, but I like to be a little more conservative. I'm thinking 12 to 14%. So I think that 10, 11% number is just too darn low. But regardless, it's very nice growth, even if they only did that number, right? Especially when you start looking at the valuation, which we're going to look at. EPS-wise, 50 cents a year ago, 78 cents of earnings per share expected in this current year, and next year, 91 cents expected. So this is a business that isn't just growing to grow, they're growing more and more and more profitable, and that is a huge thing and something I'm super excited about for this particular stock. The valuation, it's a joke. It's a complete joke for this company, okay? The forward P on this company is under 21. That is silly. This is a profit machine that's becoming a bigger and bigger profit machine, a cash flow machine that's becoming more and more of a cash flow machine in the future, a very nice revenue growth company, right? We're talking about double-digit revenue growth, and to be trading at a 21 or under a 21 forward P, it's just silly. This company should be trading at a 35 to 45 forward P, in my personal opinion, right now, based upon where the business is at. Dropbox has remained around on my iPad on its front page for over 5 years now. That service is phenomenal. It's what I use for cloud. It's what I prefer for cloud. I love this service, and there's millions and millions and millions of folks out there that feel the same exact way, and they love it for their cloud needs out there. Just super easy to use. I just love Dropbox. I don't know what else to say about it, okay? Fortress balance sheet. I mean, look at the balance sheet. They were talking about over $1.1 billion in cash sitting around in this balance sheet. And remember, the company's only, what, a $7 billion market cap, $7.5 billion market cap. And remember, the company's super profitable. So likely that cash number is going to continue to build. Next thing you know, it's going to be 1.3 billion, 1.5 billion, 2 billion as the coming years come. So yeah, it's a beast of a balance sheet. However, there are shorts everywhere in regards to this particular company. There's no doubt about it, okay? Shorts are everywhere around this stock, and they're just swimming around it like a bunch of sharks, okay? I mean, I haven't dealt with this level of shorts in a particular stock I'm involved with probably since Tesla Tesla, okay? Which obviously Tesla Tesla always had a lot of shorts swimming around it. I mean, there still are, but they're just much quieter than they were before in the past, okay? And they'll show very misleading things like this, okay? I'm not sure if these folks are short or they represent shorts or what the situation is here, but graphs like this are so darn misleading. Look at this. So I blanked out the numbers there on the left-hand side. If you looked at that, you would assume the company's going to go down to what? 1% growth? A 0.5% growth? Like just look at how misleading this chart is. Now let's go ahead and show you those numbers. They put the bottom of the chart at 9% growth. Who does that other than jokers that want to mislead people, okay? Who puts the bottom of the chart at 9%? You don't do that. You put the bottom of the chart at 0%, okay? And then you have a 10% number and a 15% number and a 20%. You know what I mean? Like, that's just completely ridiculous to put that's just such a misleading chart. So anybody that's even thinking about looking in Dropbox, they're going to see this article and, oh my gosh, dark clouds around Dropbox. What's going on here? And then they see a chart like that and they're like, oh man, this company's going to not grow at all in the future. Look at that. They're going to be down like 1% growth. Man, if they're going down to 1%, they're probably going to go negative. It's just a complete joke at the end of the day, okay? All I can say to shorts is thank you. Thank you for the gift that you have given me, which is keeping the stock price low so I can continue to buy in heavier and heavier in this company rather than just shooting up like crazy. Remember, shorts are very short this stock. Look at the share short. We're talking almost 21 million shares or short sold in regards to Dropbox stock. That's a massive, massive number. The shorts are very happy to short this stock. They think it's going down a bunch, okay? And I just gotta say, get ready, shorts. Get ready to get your shorts. I won't go any further than that, okay? Just get ready. That's all I'm gonna say in regards to this company, because I think this company is gonna continue to execute, continue to put up very nice numbers, and I think the word will get out about this company, and more investors are gonna be intrigued by this one, get in, and I think, I don't think it's going to be a very pretty situation for short sellers out there, in my personal opinion, and they are very short, okay? Now, in regards to Dropbox stock, I will keep building this position out as much as possible, okay? And I can't go too heavy in this one, but I can't go too heavy in any stock, okay? But I'm gonna continue to build this out. I'm gonna try to buy as much as possible for the next 2 months, because I think there's a good probability this one could start to move pretty nicely in 21, and I wanna make sure I've got my position at least, exactly where I want it going into 21. But I might even still buy this one in 21. I mean, if it's anything under $20 a share, dude, I'll continue to load up this one. If it's under 20, I will continue to buy. It doesn't matter, okay? This has a possibility of becoming my #1 biggest stock. No problem. I have no problem sleeping at night if I'm holding Dropbox as my biggest stock in the entire stock market. Let me be very clear about that, okay? And I cannot say that for many of the stocks I hold, okay? A lot of the stocks I hold, some of them might be a little more speculative, some of them might be a little bit, but Dropbox? Dude, cloud's not going anywhere. Dropbox is an amazing company, an amazing service. They have almost unlimited TAM. They have low revenue churn. It's an amazing business model. They own HelloSign, which is a competitor to DocuSign, which is something that's going to continue to take off over the next 10 years. And I'm looking at all this and I'm like, You know, I just don't think Wall Street sees what I see in this company. We have a difference of opinion. I think I will win on this, just like I've been able to, you know, kind of beat Wall Street with a lot of these stocks. We'll see. Let's come back to this one in a few years from now. Yeah, I like it a lot. In shorts, get ready. That's all I got to tell you, okay? Stock number 303, all right? Stock number 303. So I got 4 probablys up here in regards to what I call, you know, what I'm looking at when I'm thinking about these stocks to buy. The 2 stocks are automatics, okay? Eli and Dropbox, those are autos. Those are for sure buys. But these other 4 stocks, I'm going to probably buy them during the month of November 2020, okay? 4 probablys. The first probably of these 4 up here is a very good food company, all right? Now, this one's shot up in price a lot, okay? I mean, a lot. Like, we're already up, I think, $65,000 on a position, and I've only been in that stock for, like, I don't know, probably less than 2 weeks now, okay? So, $65,000 plus gain in less than 2 weeks. It's gone up a lot. There's no doubt about that, but I might still buy some more of the stock, and the reason being is, at the end of the day, I think that this company has a possibility to be a billion-dollar company, if not a multi-billion-dollar company 5 years out, 10 years out. And so if I'm looking at it from that perspective, at a $200 million, $250 million market cap, and I think this has a potential to be a multi-billion-dollar market cap 5 years from now, you know, I should probably still buy some more, even though it's gone up so much. And it's hard to do that. But at the end of the day, it's an amazing company. Look at this. Due to overwhelming demand, processing time on orders will be 2 to 3 weeks for their orders. I mean, there's just, you know, the company's just putting up some amazing numbers. People are ordering from their website left and right. It's phenomenal news. I did a full-on video about this particular stock if you want to watch it a few days ago. Actually, it was last week on the main channel. So if you want to check that out, go ahead and do it, okay? Stock number 2 of 4 of these probably stocks is Switch, ticker symbol SWCH. This is a company that has a $3.4 billion market cap on it right now. And I really like the Switch stock, okay? They own these massive data centers, so not everything can be on the cloud, essentially, if you're a big company. And so that's where somebody like Switch comes in, and they have these amazing data centers that have amazing protection, all those sorts of things, okay? Look at some of these pictures. I mean, they're epic, all right? And it's just an amazing business model. And they have a new product coming out in 2021, which is essentially what they call autonomous security robots, okay? And these robots can basically, you know, I don't want to say protect areas because they're robots at the end of the day, but they can, if they see something going on, somebody can be watching the cameras on that's like from a remote location and call the police if something's going on. And so I imagine these could be really big. I think in my city alone, Las Vegas, these could be really big in the strip area where sometimes you just can't have officers or security and things like that. And these kind of going around different locations. I think this could be a really interesting business model, and the amount of corporate campuses that could use one of these, if not several of these around them. I mean, there's a lot of places, colleges, stadiums, and cities in general. Yeah, I think this has pretty big dang potential, guys. So that's really, really exciting to me, and that's just something that's completely on the DL on the stock, okay? It trades at a 62 forward P, which on its face value looks expensive, okay? It absolutely looks expensive. I mean, the market in general, what's going to trade at a 20 forward P or somewhere around there, and we're at a 62. But at the end of the day, this company deserves a big premium, in my opinion, a very big premium, because one, this company hasn't even been, you know, focused on profits. So that's not even like their biggest thing right now. I didn't even include that, okay? But one, they have a recurring revenue business model, which those are the best business models in my personal opinion, because you get to forecast so much. You know what's going to likely come in over the next 6 months, 12 months, 18 months, 24 months. Super low churn in this company. If somebody signs up with Switch, they're generally staying with Switch. I love that about this company, okay? The company has very nice growth going for years and years and years to go in the future for this company. And also, their real estate is worth a lot, okay? They own a lot of land and a lot of very valuable structures. And that stuff is worth stuff, okay? And it's usually worth a lot. And so when I look at this company absolutely deserves to trade at a big premium to the market, okay? I really like that one. Stock number 3 of 4 for the probablys for the month of November is Nordstrom, JWN. It's a stock I'm going to have to probably pick up some more shares of. It's still under a $2 billion market cap. As long as this company's anywhere remotely close to this valuation, which is just far too cheap, I'm picking up some, okay? It's Nordstrom. We're getting Nordstrom Rack, Trunk Club, amazing business model. You know, it's something that's obviously been hurt in the short term by the closures and the Rona and all those sorts of things. But long term, love this company. Trading at an 8.5 forward PE, just far too cheap. Yes, Nordstrom, I love this one as a value play, as a, I don't even want to call it a turnaround play. It's just something that's been devastated because a once in a 100-year event came out of nowhere and smacked it, okay? So yeah, definitely love Nordstrom. They're expanding their online business big time. Winning Resorts is stock number 4 of 4 up here in these probablys. I've been buying the stock super heavy, anything around $70 a share. I've been buying and buying and buying. I think I just bought a bunch more here today. Love Wynn Resorts, $8 billion for the entire company. Just silly. I did a full 20+ minute video on Wynn Resorts, super in depth. If you want to check out that, type in "I can't stop buying this stock" into YouTube, and yeah, you'll go ahead and pop up there and you can watch that video. Super in depth about Wynn Resorts if you're interested in that. Hope you guys enjoyed today's video. As always, if you don't mind, smash a thumbs up. Helps out the YouTube channel and algorithm like a ton. I appreciate each and every one of you guys. That's all I ask for a payment. Also, if you guys want to check out my private group, go ahead and check it out. It's the first link in the description down there. You actually can't check out the private group. I don't know why I said you can check it out, because you really can't. You got to apply first, then get on the phone and speak to somebody about more information on it, see if you're even a right fit for it, and then maybe you'll be allowed in to kind of learn my strategies inside and out, be part of the private Discord chat and those sorts of things. But first step you got to take, if you want to even have a chance to get in there, you got to fill out the application. First link in the description. Thank you for watching and have a great day.